Hey everyone, welcome to the weekly review. This week I'll go a bit more in depth on mega caps and a few individual names that I posted on Twitter. But before that, Azuka Spy and where we're at. And biggest levels 2023 high, 2024 open. In theory, we should have topped, but it's not 100% sure. I think this scenario is still the most likely to play out, and we go below the 2024 open, and then we actually see the breakdown. Until then, we could go sideways and bounce one more time. I drew this pennant here to give an idea, or like we could do something like this and eventually break down. And when we lose the 2024 Open, that's gonna be the bear season starting. We went above it once, rejected, saved, another time, rejected, saved, another time. This time, I think we get the full breakdown, and we will be expanding this pattern information to the downside. And the trigger for the big one starting is the losing the 2024 Open. And I think we can see at least a 5% pullback. Target is between 5 and 10%, but that's kind of it. I'll show on the daily in a second. But uh, like I said, trigger 2024 up on below, close below it, and then we finally get probably like the 2% plus down day, like we haven't had in quite a long time on SPY, possibly even higher. But this looks really weak. We have RSI very low here. You never want to see much lower RSI on a retest of the top. This is not bullish at all, and we should see continuation down. Um, and if we don't, let's say we get a fake breakout, top is the all-time high at 479.92, and this gets rejected with a high probability and goes down. Okay, let's look at the daily now. This this is Tuesday. Tuesday. Tuesday end of day. My bad. So this because Wednesday we get flows. This is OPEX. No, Jan 31st. Whatever. This is OPEX. This is OPEX. So like I said, target is at least a 5% pullback relative to the top. And let's look at how much that is. 5%, the approximate level is transform this level, this previous high into support. This is the minimum I think we can see on the pullback. And if we go lower than this, target max target is 10% in my opinion, which would be the 2024 mid. And I've used the Sarah Strat Sniper 50% rule in the past, and that rule says if for engulfing candles, if we have a candle that took out the previous candle's high, for example like this, if it passes the 50% level on the previous candle, meaning this opened higher, it has the potential to become an engulfing candle. If it passes 50% on this candle, it's very likely that it will become an engulfing candle. And this has worked on SPY as well. Let me show you the 12-month graph. This was 2021. We took out the high, then we went lower. And 50% is 421.91, which was a support for a while. I'll zoom out. 50%, I'll just put it differently. So 2021, we went above. We first dump, we bounced almost exactly on the 50% level and had a strong bounce. Then we went down again, we overshot it, but this was a save, meaning when we went below it, we actually closed above it, so it doesn't count. Then again, we bounced on it several times. We bounced again and eventually lost it. And when we lost it, we had the beginning of the next leg down, and it was a big one, meaning we went for the engulfing candle. And on the yearly, we took out the lows here. Now we have a very similar setup. Uh, the difference will be what happens when we test the 2024 mid if we test it this time and it holds. First of all, just like in 2021, we should be expecting a strong bounce. This level will not give in easily. So if we ever touch the 2024 midpoint, expect a strong bounce from it, just like we had here, maybe multiple bounces from it, just like we had here. So these swings will be very, very profitable to play if we get as low as the 2024 mid, which is only 10% lower than where we are here. Another thing to note is that this level, if it plays out until Feb OPEX, is exactly the trend line that we have now, the uptrend trend line, which again makes it much more likely that we will bounce from it and could have a very strong bounce if we ever get to this level. If we get to this level like in the next couple of months, and bounce and go higher. So this is very constructively bullish in my opinion. This would count as a double dip kind of thing, and then we go up and it's bullish. I think we go to new all-time highs after that, but we have to get it. So then, if we ever lose uh, this level, let's say we do this, bounce, bounce, then we go down below it, then the target is to take out the 2023 low. So that would mean like 375 each, let's say maybe a bit lower, 370, 365. I don't know. I don't think this will happen, but if we lose the 2024 mid, this will be the target, like taking out the low. It depends when it happens. Like if we are to lose it, it should happen in the first half of the year. But that's kind of it. Okay, so this out of the way, my target would be this 10%. I actually think we get this. We shall see. Don't recommend like getting 430 puts. That's just crazy. Unless you take them like in 2025 or something like that. Uh, just take something slightly out of the money, and we'll see what happens then. So these are the playouts. Minimum would be here. Maximum would be around here. I think we 100% get a bounce if we ever get here, and it's gonna be a very strong one. At least to 455, 460, at least a retest of this area here when we get to that level. But a lot needs to happen to get this kind of 10% drop in a month or so. Okay, now we need evidence that this is going to happen, and I think there's quite a bit of evidence in individual names. Tesla thought it would break out. It didn't. It was a fake breakout, and fake breakouts lead to breakdowns. We also took out the AVR from the low, and now we have two targets. First would be this 210 area here, meaning we don't want to undercut this low. Let me change to my usual color. We don't want to undercut this low here. This would be not as good. Basically, we would be going for a lower low, but that's possible as well. And then it's the 195 area. 200 is psychological support, but we can overshoot below it. So 200 is here, and just like it happened exactly here, 200 was the psychological support, but we went slightly below it. This can happen again, maybe go as low as 190, because this looks like a broadening formation to me if we if it doesn't hold like this. So we have this one here, we have this one here, and if we are in the 10% correction scenario, Tesla should be doing something like this. So that's like 180, and then very, very strong bounce, and this time I think it breaks out and actually goes. I am I am bullish for the rest of the year. I think we do get two 10% correction, one now corrections and one in autumn. But after this 10% correction, we should be just flying. Uh, there's some reasons for that. For example, CPI, we have CPI for the first 2 months of 2023 was a 0.5% month over month. That's a huge, huge base effect to drop from the measurements. Meaning, even if CPI overshoots for the next 2 months, it will be significantly lower as a number. So I don't remember exactly what the target is. It won't be on the economic calendar because it's too far away. But it was 3.4, I think, this month. So imagine that it's plus 0.2 month over month or something like that, but the base effect is 0.5, and that would just cut zero point 0.3 from the number by default because we lose a big number and add a smaller number. So CPI next 2 months will be maybe it's bigger than expected, but the full number would be smaller than expected. Not than expected. Will be a smaller number overall. So this is the max we can see for Tesla. Obviously, if we get into the 5% correction range, it's gonna be either this, probably the 200 range around here. So something like this for a slightly higher low, and that's kind of it. Apple, this looks like a bear flag to me. Oops. Which should lead to continuation down. Minimum target is the trend line retest. If the trend line is lost, probably like 166.65, we retest this channel, not the channel, this range here between 166 and 196. Probably building towards this. Apple should be range bound for the entire year. This reminds me of the Amazon behavior in 2022, like this. It was range bound. It shot up to twice but got rejected. It was just, oops, from here to here and back again. And this looks like Apple is building something similar. Oops, didn't want to do that. So get rejected, go down, go up, maybe overshoot a bit here, go down again. Basically a week of distribution range for the rest of the year. Nvidia broke out last week as I thought it was looking like it was going to do. Hit 550. Now it's the top of the range, and I don't see it going higher anymore. So correction, uh, most likely target is this for the trend line test. Again, if it's the 10% pullback, this should be it. If it's not the 10% pullback on the market, uh, it could even turn 500 in support. Like this is a horizontal breakout. So this is the bearish scenario for Nvidia. The bullish one is we actually bounce here, turn the horizontal level that is building towards a breakout into support and goes back higher, but don't really see it going above this trend line anytime soon. It's too early. It needs a catalyst, something like a very good earnings season like we had here. This is like a gap up or something like that. And if it gaps up and goes higher, it can go much higher, like probably 700, 800, something like that. But don't see it happening right now. It needs a bit, it needs a catalyst to do that kind of breakout, considering how high it went over the past couple of months. Okay, Google. Google. Now that I brought up that sideways moving range for Apple, it looks the same uh, for Google. And this is an overshoot in my opinion. We have a rising wedge just like we had here. We had a breakdown retest and then a bigger flush. This time it could play out similarly, meaning breakdown, maybe saves, maybe goes back high, and then we have a bigger pullback. And just like Apple looks like sideways distribution, Google looks like sideways distribution as well. All of these are week off distribution. They all kind of look like this or like this. So this is not pointing the best outlook for 2025, but for 2024, I think it's gonna be profitable. Buy when we hit the lows of the range, like 122, 125. Sell when we hit 140, 150, and just profit. And I kind of love this predictable movements in ranges. Uh, I'm hoping they play out as I describe them because they're going to be extremely, extremely profitable if they do play out like this. Okay. Amazon hitting the top of the trend line here. It's in need of a pullback. This one did like I explained for Nvidia, meaning it had a horizontal breakout and turned this into support. I wouldn't be extremely surprised if Nvidia does this because it's the best performing name and the most loved name in the market right now. But this could still turn out to be a fake breakout. So now it will go down, obviously, but it's a double test. If this second test fails, this still becomes a fake breakout. So it has to do this to be bullish. I think it can go higher if it is bullish. But if it goes below, I think the breakdown can be quite big. And target would be 120 area again. So, uh, and again, it could build into a sideways moving range, which seems quite reasonable for all of these mega cap names to do, since they outperform massively the previous year. Uh, they need consolidation, and like Amazon is a very good example. Huge breakout, surges up. How much was this? 72%, and then has a long consolidation sideways period. Last year they all did the same. They had huge moves up, and now it's the time of the sideways consolidation for them for mega caps. And the rest, it's up to the rest of the market to outperform, not on mega caps to keep going up like crazy. This is not healthy for the market. Mega caps being that big of a percent of the market and going up continuously. So it's this year is the years of the mega cap going sideways, and it's gonna be a very good setup if it is like this. Okay, now Microsoft. I like this channel here. Seems a pretty good alignment with the levels, meaning top here, support, resistance, fake breakout, resistance, but eventually breakout, support here, and we are retesting the highs at this level, and this leads me to believe that we will get rejected. Uh, but this other trend line that I drew here has been acting as support. I can take this out and just say this is the level that has been acting as support. I think I can even draw a horizontal one, something like this, and take out the trend line. This one we don't care about either. And Once again, this has been acting as support. It's now a demand range because we broke out from here. So 371 is going to become demand in theory. But if 371 fails to become demand and it goes below this horizontal level that it captures, then it becomes a fake breakout. Fake breakouts lead to large breakdowns, and we should see a retest of this channel's mid area. We can also call it a horizontal level like this, here, 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 and that would be our target. So if we get that 10% pullback in the market, I think it's reasonable to have a target of 315 for Microsoft. If this stays bullish, just like with the other names, it has to keep holding on this horizontal breakout that it did. Meta moved higher. It's almost at all-time high, similar to the market. Um Expectation is that it will pull back just like with the other names. This one is a bit more complicated. It's gone up like crazy. I I have to keep an eye out on to see if we get reloads on the call positions because it has a crazy big expiration, like 40% of all delta on January OPEX. And if that doesn't get reloaded, I would expect we get a major pullback, like around 20% for Meta. We shall see. This seems like the target level, like 285, meaning horizontal level. The gap here that caused a big drop. If we go below this level, which is unlikely, I think we drop very fast. Just this gap will remain kind of a gap area because it doesn't have uh, a lot of volume. So main target would be 285-ish, and then a strong bounce, and still sideways movement. But if this fails to hold, it should be a very fast move from 289 to 90 to 240. Netflix, nothing we need to say here. The back-to-back bearish divergences. This should go down and retest 400-ish. Finally, XOM. So CL, not that CL. This CL. I have many levels here, but it doesn't really matter that much. On Friday, even though it said, oops, it said on the chart that it's plus 1%, it's not. It was a mistake there. Friday was 3% rejection. So it went up 3 and a bit percent and closed the day negatively. Why negatively? Because we are below this candle. So if I measure the close from first day, minus 0.12%. That was the close on Friday, even though in the dashboard it looked plus 1 and a bit percent. And I made a trade on Twitter, meaning about this, meaning that even though oil has been kind of going up decently, oil stocks have not been following it and have had quite anemic reactions to oil being bullish. And on top of that, oil itself, even with basically the best macro conditions for oil to go up, keeps getting rejected. And there's only a sufficient amount of rejections you can get before it reverses. And I think Friday was the final drop. So I would expect oil goes on its path to 65, and this will cause oil stocks to finally have their week off breakdown with a target of doubling this up. Uh, Problem with breakdowns like this is they can go much bigger than anyone expects. And once again, I will use Amazon as an example, which had a very nice week of distribution pattern. And I think it actually doubled it up. Let's measure from here. And let's say this is the level. It actually went a bit lower. If I count from the top, it's probably spot on. Yep, exact, almost exact double up from the top to the bottom. But IWM had a similar pattern, and I think it went lower. Let's measure from the top as well. And this is the horizontal level. It it went lower. The low was lower. Bitcoin much went much lower. It's measuring. Actually, it didn't. It depends what you count as the week of distribution pattern. Count it from here. Let's see, from the top to here. Yeah, this didn't go as low. So it depends. In general, the baseline target is a double up. I remember one, it was TSM. TSM has a nice one. So week of distribution pattern. I won't count from the top, I'll count from here. And this went much lower. If I count from the top, this probably went lower than that. So baseline target is a double up of that range, which would put it to 80 probably. This will be a bigger drop than oil will get. Like oil will drop 10%. This will be like 20-25%. And you can see it in the names as well. Oxy has this range here. Take out the targets. We have the trend line here, which it was just a backtest of the lost trend line, and now it's preparing for an impulsive move down. Like once it goes below 55, then target is probably this area here, when this was the Buffett buy announcement that caused this big surge up. And for the double up test from 55, target says it's like 37, which is close enough to this that it counts. Uh, Devon, similar, like we've been holding on this level for a while now. If we get another push down, we should be going to at least 30. I posted 10 on Twitter. Big level to hold. It's been support multiple times. This is like a bull bear pivot. But if we lose this one, all hell will break loose. Not saying that it goes to 225 or 250 like last time, but it's gonna have a major breakdown if it does. So I am turning bearish on oil stock. I think they are short if they lose the recent lows, um, meaning for some it's whatever the fuck this is. Let's see, 97.66. So some, if it breaks 97.66, I think it's a short. Everything relative to that. If they make new lows, it's not looking very good in my opinion. And then let's talk about a few individual names. First of all, Aher, and this is not looking that good. The problem with them is not necessarily that it's not necessarily that it's very bad, but in the face of market weakness, this should go lower. And let's look at volume. We had a big spike. Uh, in theory, it should hold here, but I don't see it holding here if the market corrects 5 to 10%. Uh, it's not the kind of stock that is correlated with the market. Earnings weren't there that good. Their backlog update wasn't that good. So I do see it going as low as 14. And I think we reassess then. One of the reason is this, the history here. Like we have, once we go below, 26 was a major resistance. This is a fake breakout above 26, and we went down here, an impulsive move down. Even before earnings, we went from 26 to 21, I believe, without earnings. That was very quickly. Earnings gave us another push down, and we filled the gap here, but it doesn't mean we stop. And when the range has been in 26, the low has been 14. So here, resistance here, support here, resistance here, and so on. So we have two historic precedents of moving between 14 and 26. And given the market is likely to be weak, I think it's plausible we could see uh, here go to 14 and then have a more substantial bounce up to 23 for now. We'll see afterwards. Uh, but it seems quite possible to me that it goes to 14. Uh, a telling sign would be a rejection here. Like we have the gap will remain open. It could go as high as 20. A rejection at 20 would start another impulsive move down. And if we take out the low here, 14 is the target. So it doesn't mean we go immediately there. We could see a bounce to 20, but like this. And the problem is the bounce to 20 could have already happened with the earnings, and it did happen. What was this candle stop? High 2027. So we actually did have a bounce to 20. That again doesn't mean it cannot happen again, another bounce to 20, but it seems rather weak and risky to hold as of now. Then I wanted to look at Nike. This overshot. The mid area was 106.3, and what is happening now? Breakdown goes up. Where do we get a rejection? 106.3. This is not a very bullish sign for Nike. And I think this will turn out to be a bear flag, and we get another push lower. Target would be below 100. I think this will potentially do it on a bullish divergence. It goes like this, let's say 97, and be something like this. That would probably be a decent buy at 97, or it's around the 100 psychological level. You get the idea. 97 with an overshoot, because if we are to be bullish, let's say we get a 10% correction is pi, it won't be a slow drip. It's gonna be fast and brutal, and the candle that we get on that 10% correction might actually be something like this. Like we gap down 2%, 3%, whatever the fuck the number is, and then the close is with a very bullish green candle, a hammer. Where else do we have like this? So don't expect a slow drip like this to a 10% drop. It's gonna be fast and brutal, and we should get a strong rejection from the yearly midpoint. This is the start of a new bull market. Look how we had our first correction, like uh, went below this horizontal level, accelerated, and then a very strong bounce here. I think this was 10%. 12%. And from this 12% drop, we had an 8% correction in a couple of days. This was like a week, 7 bars. This is what to expect, like a very quick drop, like we had here. This, how many days was this? 7 bars as well. So a week and a half for minus 11, and then another week and a half for plus 8. This is my expectation this time either. It won't take a long time. Okay, JPM had earnings, a very, very bearish, not engulfing, but a bearish candle. It closed negatively. This was high volume. It was high volume. So it's looking like a good short. Target would be 157. If not that, then 150. This one had a week off pattern as well, and it went much, much lower than the double up. But the first real big bounce was actually the second one was on the double up of the pattern. So again, sideways from here, I consider JPM to be almost a mega cap. Go down, go sideways for the entire year. And I put Wing on the list. Seems overly stretched. We have a very similar setup to here. RSI going sideways, had a correction. I mean, all of this compared to this. Should get rejected. Then we have home builders, had a huge surge with the market. A very big bearish divergence here on the retest of the high. This is also all-time high. Seems like we're gonna get a pullback into this area, like 128, 130 at a minimum. It could be lower, like it could be this one. Then I have my bottom catch list. Which is Mattel, BMI, Silica. I think this one could go lower, like this, and then bounce. BMI, I drew it and posted this one. Could be here, but I would, I mean, it's fine if we get this level here, but I would rather wait for earnings. If I open a position before earnings, I will probably get out on earnings. We'll see. And Silica, I want to see an overshoot, go to 9, and then bounce. Don't think, given that I expect oil to be very weak, and I don't think we see this bounce here anymore. So it should go down, potentially even go to 730. We'll see how it reacts to the move here, and then a rejection, and then up. Okay, I think I'm done for this week. Oh, I wanted to show something on, remember that I saw the AVWAP. On why, another reason why I think these names will correct relatively in size. I'll leave this on here. So let's take Microsoft for example, and AVWAP from before the COVID high. When we are above the 2 standard deviation, it's in overshoot mode, and in general we are hugging this. When we go above it, we get a correction relatively shortly. Uh, Here we stayed above it for quite a while. We've been staying above it for quite a while. Here we stayed above it for quite a while, and then this one led to a very big correction. Overshot here, correction. Now we've been staying above it for quite a while. This makes me believe we will get a bigger correction. And every AVWAP I put shows the same kind of thing. From the COVID low, it's virtually identical to the other one. This shows the same thing. From the previous all-time high, overshot the 2 level, and we should be getting a correction soon. From the recent low, recent meaning October low from last year, from 2 years ago. Overshot a bit. Now we haven't overshot, but all the other ones are saying that a big correction is coming. And it's the same for all the names that have been going up relatively. So let's take COVID low. Almost hit the 2 standard deviation on Meta. From the all-time high, hit this level as well. And from the low, this is not going to look good because the move is too big. But it's coming to the top and it should correct. Let's look at Nvidia as well. Nvidia should be very strange. Been above 3. Holy shit. The COVID low, but I would rather measure from the top. Been above 2. 2 is here. 15. So a big correction should be coming. This is a mean reversion. It won't go to the red line, but still we are way too high compared to the baseline. Let's finally look at Apple, COVID low, 2 standard deviation acting as resistance here. Previous all-time high, getting a bit above the 2 standard deviation. Well, you get the idea. And another reason why I think we get the correction, and it's going to be a sizable one for the names that have been outperforming a lot. Okay, that's it for today. Have a good one. Bye bye.